joining us for his take on an extraordinary 24 hours live from Adelaide. Fraser MacLeod from Shaw Partners. Fraser, happy days for equity investors today.
Yeah, certainly happy days. Thanks for having me on again. And you know, we all thought by this point today that that the election would be over, we'd have a result, and we don't. So you know, the election is not over. So Trump's going to contest it. I'm sure this will drag on. I don't think this will be over by tomorrow. Probably won't be over for weeks, really. Could even drag into January by the time that the court settles things out. So, but what is clear is that we are not getting the blue wave. So markets are probably reacting to that because blue wave would have meant lots of stimulus, certainly, but also lots of regulation and lots of tax, and market wouldn't have that. So we're probably going to have a Biden president, and we're going to have a Republican Senate, or certainly a very mixed and divided Senate, and no big fiscal spending boost of any giant size, less bond issuance, and because of that, then probably lower bond rates. And in the real world as well, capping markets, you know, over the course of the next couple of months, you would logically say would be COVID still rising and lockdowns looming everywhere in the real economy. So a bit of a mixed picture. We can't take a great guide from what's happening today that it's just going to continue forever. But I think it's probably more of an interesting market at home. You know, our market today is up, not by a huge amount, but our market today is up. But coming out of the local lockdown here in Victoria, probably a bit more encouraging.
Certainly, it's good to see the borders coming down as well, Fraser. I want to go and get your views on the healthcare space. Now, we saw that as soon as the results started to flip back towards the Biden and the Democrats, that healthcare really benefited last night. We're seeing that follow through today here in our market. Given the likelihood that there'll be less punitive potential put on the healthcare space, given the current makeup of Congress, is that where you want to be investing at this stage?
Yeah, look, I think it is. I think that's probably quite sensible to continue with that theme trade. You know, we saw healthcare go up an awful lot in the US yesterday, along with tech. And you know, you look at stock like ResMed. ResMed over the past few days has been amazing since they updated. So ResMed is up 15% just this month so far. And the first quarter was massive. So, you know, that ventilators are still going to be in huge demand, probably for many years to come, although they've had the big kicker, obviously, from COVID. But, you know, everyone's going to be spending on healthcare almost like they used to spend on defense during the Cold War, in that you need to have this standing army now of healthcare equipment and personnel, potentially, just to be able to deal with continued waves of pandemic or even a new pandemic. That's going to be in focus probably for the rest of our lifetimes. And respiratory product demand is going to be very, very strong. So, you know, stocks like ResMed, not cheap, but, you know, trade on P's in the mid-40s. But we do like these more dependable, great quality healthcare names like CSL and ResMed. It's hard to sell them. You wouldn't do it.
NAB rounded out those big four bank reports coming through today. What did you make of it? The markets responded quite favorably. In fact, I think it's been the most positive reaction to one of these results that's come through.
Yeah, so look, just to recap, we are a big overweight now on banks, so we like banks a lot. We've got our key picks. Our key pick would really be CBA over NAB. So NAB delivered 3.71 billion cash earnings, and that's probably slightly below consensus. I think 3.79 was the consensus that they would deliver today. Obviously, the earnings are well down in comparison to 12 months ago, but against expectations, they were maybe slightly softer. They did pay a dividend. The dividend was 30 cents. The dividend is at that you know, just under 50% payout ratio that the regulator allows them to do. The net interest margins they held up. They've got bags of capital, so that no one's really worried about the level of capital or them needing to have a raise. The outlook, however, we felt was probably just a wee bit bearish. You know, the thing that defines NAB, of course, is that it is, and it always will be, probably the best business banker here in Australia, and there has been a tick up in their past due loans, which was a bit of a surprise. We would say that's probably the one negative that we would take out of the result, and that's more of a small and medium-sized enterprise problem. So we're interesting that we would really have a look at that and go, that's our one little disappointment from NAB. It wasn't awful, but you probably wouldn't pick a small, medium-sized enterprise banking business as your lead play. You'd really want to go with the retail play of CBA in our view.
Fraser, I don't know about yourself, but I don't mind the Penfolds at the best of times. But Treasury Wine Estates, do you like that, given what we've seen over the past few years? Very rocky road for shareholders.
Yeah, look, I saw the quote with Tim Ford, the CEO, today, and he's just going, well, we got to deal with the cards that we're being dealt with here, and obviously, from a shareholder's point of view, the cards are not looking as pretty, are they? If you're holding Treasury Wine, so the China tariffs just make it too hard to predict, and it's very, very uncertain as to where the outlook is. What is certain is that demand is very, very high, and especially as COVID lifts and lockdowns lift throughout the world, you would hope that people would be able to drink more wine, and certainly a lot of the premium brands would benefit. But it's too hard to really get behind Treasury Wines when the Chinese have got their knives out for Australia. So demand okay, but guidance is just not possible. I think there's probably better ways to go if you're looking for guidance to be back on track for Australia with the ASX and the Australian environment as a whole, meaning lots more stimulus, lots of free money, economy coming out of the worst of it now that the lockdowns are away. You'd really want to go with the banks. You'd want to go with Transurban, Woolies, Wesfarmers would be better plays as well, and then the likes of CSL and ResMed for your healthcare. So I would be so tempted with Treasury.
I'm curious to get your thoughts. We had JB HiFi on the list there. We get a bit of an update coming from JB HiFi, I think next week. When we talk about this recovery trade, does that mean that a lot of those companies that benefited from the work from home scenario, which JB HiFi was one, is that sort of end of that narrative for them?
Look, I think there's a couple of ways of looking at that. Are there firms that had just a cyclical kicker as a once-off, or have they just simply moved forward with the structural benefit that was going to come to them anyway? And I think JB HiFi probably has that. It's an incredibly well-run business, regardless of any environment. But any business that really does the online and bricks and mortar incredibly well is worth paying that premium for in such a low rate environment. So keen on JB HiFi, regardless of what happens next. You'd also probably stick with the retailers of Woolworths and Wesfarmers, simply from the fact that demand is just so strong. Woolies and Wesfarmers, from their recent updates, you can't. The demand is so strong online, they can't supply enough resources to that side of the business. That's the constraint. So it's hard. We feel that we're not going to go back. The old world is finished, and we've just really seen an acceleration of consumer spending habits into the new world. Probably what you would have seen in future years is happening right now, and it's now here to stay.
Yeah, Fraser, excuse me. There's not an update coming from JB HiFi next week. I didn't want to get anybody too excited about there, but yeah, thanks for that. Good analysis.
Yeah, Fraser MacLeod from Sharon Partners. I said to you last time we spoke that next time in town, I'll go and let you know. I'll go and buy you a wine next Friday. How about that?
All right, thanks again.
Order the expensive one, Fraser. Top shelf Penfolds. There you go.
we do have the bar here. Okay, I'll see what I can do. Cheers.